So we've probably got a couple more minutes, probably got time for one more question if there's one in the room. David.
Yeah, I've had one experience with somebody wanting to buy my company before, and I looked into it, and it seemed to be a trend, and it might just be certain types of venture capitalists that have an idea that either they're going to kill the business or it's going to grow. They overheat it to a point where if it doesn't get that continual funding, it will die very quickly, and everybody walks away with nothing. Or it's going to be really successful. Have you found that to be something that still happens a lot, or
not? You're talking about venture capital guys coming in specifically, or investors?
Specifically, yeah. So, okay, we want at least a 10x return, or 20x return, whatever it is. So what we'll do is we'll throw $10 million at you. We want you to burn that pretty quickly over the next year. You're going to need some more before then, so we're going to have to pump more money into your business, and we'll continue to pump more money in until it doesn't look like it's going to work, and then everybody loses because you have to fire everybody because there's no money. So a good business is actually destroyed through greed.
Look, see a lot of that. A lot of that, as in sort of really, really good businesses with huge upside. It's usually the other way around. I'll be honest with you. It's usually that businesses need capital and just don't get it, and then that's when they lose a little traction. It's not necessarily go, well, here's a $10 million. The guys that bringing in the $10 million of the funding are doing so because they want to get a return on their investment. They believe that $10 million business is worth minimum, call it 5 or 10 times for the risk that they're getting, right? So it's actually normally we do see it the other way around. And it would be interesting to sort of have a chat afterwards just about your, what happened with your and obviously the case study that you took and what occurred with your potential business and things that worked for you and didn't work.
Great. Hey, can we give, we've got one more question over here. We'll do it quickly.
I got involved in a previous organisation with some merger and activity type discussions. Didn't go anywhere in the end. The greatest challenge we always had was that the organisations we were approaching had should we say, an overinflated sense of the value of their businesses, primarily because they had that heart passion. They built and grown this thing from the start. One guy, for example, who'd been operating business for 14 years, it was making a loss. It was on a bit of a downward decline, modest revenues, but wanted like a 10 times return on it, sort of thing. Any hints for dealing with people that just have a completely overinflated sense of value on their business?
Don't do anything. Just keep it to yourself. I mean, look, we see a lot of guys out there who are very greedy, and that example that I used with the Domino Pizza opportunity and that Israeli company, the corporate advisor on that transaction, as part of his fee, issued himself 6 million shares at 20 cents. Not a bad fee. That doesn't include the capital raising fee on top of it. So when you're looking at that, or when you're sitting in the room with these type of companies, and you got the corporate advisors and management paying themselves silly money, but also in the money or at the money options, and you just have to go, it's not for us. And yeah. Everyone's interest needs to be 100% aligned, right? Especially management need more skin in the game. As in Toby Chandler of Seafoam buying, not only does he have 50 million shares, but for him to buy another, call it a few million shares yesterday on market on the first day of listing, that shows a positive signal. When it's up 200%, that's what you want to see.
My experience in that space, because we've acquired one other business, was, and they approached us in a period of desperation. It's actually when they're well motivated, and you see it all the time. Look at Alliance Software. In rough numbers, we turn over $3 million. We're running a 10% margin. I feel like it's worth a lot more than $300,000, but services companies trade at about 1 to 1.5 times their profit, and it would be heartbreaking if someone, if that was all it was worth. So for me to sell that and give up the ego, I'd probably have to be in a pretty desperate position, realistically. Otherwise, I just would never do it. We're going to stop. Can we give Niv a round of applause, please? Thank you.